Mr. Bradshaw at AddSometoYourIncome.com here to answer the question, what is the difference between net and gross income? And I will define those. You know that taxes are taken out and other things are as well, and we'll go into that. We'll define them. I'm going to give you an example from mine. Then I'm going to get into a couple of extra things for you. I want to help you to know what kinds of incomes have less taxes taken out, what kind of incomes you get more in your pocket of the three types of income. Then I'm going to go into an example at the end of debt to income ratio and whether it uses net income or gross income and a really quick way to calculate that. So let's get started. This question of what is the difference between gross and net incomes really comes down to the definition, knowing what those words mean. At the school I teach at, we have a teacher's aide whose name is Mrs. Gross. She happens to help with math. I joke with her about how most students think her name just means something gross. And yet, as they get into the math, they learn what gross is. And that's where we're going to get. My first definition, however, is actually about income. What is income? I can't resist saying what I usually say about income as my favorite definition, which is income's the money. Money is coming to you. There are three types. I'll get to that soon. The type of income we're usually looking at to figure out your net and gross income is your labor income. Money's coming to you. You want to know which one of these is net, which one of them is gross. So I have an image here of a fishing net. A net, this is how I think of it, a fishing net goes through the water. After it goes through the water, it left a lot of things that didn't get caught in the net. What is in the net is what is left over. That's my little trick for remembering. The net is less than the gross. So there's Mrs. Gross, and we joke with her, right? That her name is like gross, like you just saw something really disgusting on that chair right next to that counter. There's no way you'd sit down right there to eat a lunch because it needed to be cleaned up before you're going to sit there. Gross in this sense, the definition of that is disgusting, and it makes you want to gag, and it brings about the feeling of disgust, right? That's that gross. A small connection to the fact that gross is more money than net is it kind of grosses you out that some of your money is taken. And that's the gross. The gross is the money that is there when you first earned it. When you were told you're going to get paid $12 an hour. And you started calculating, I worked this many hours, this is how much money I'm supposed to make, I get paid every 2 weeks. And you plan out how much you're going to spend. Usually people do that based on the gross. Then you get your paycheck and there's money missing. Where did this money go? How is it that you have netted less than you made? Well, there were taxes, there were insurance. There's a lot of things, and we're about to look at mine, and I'll walk you through just what they are. I'm not going to show you my actual numbers on this case, but as an employee, as a teacher, the money that's coming to me, there are deductions. They take things out. So know that as I go to show you mine, there are a couple of things that are interesting. For example, I'm putting money into the 401k, and that is before your payment, but it's actually part of the net. I'll try and walk through it. So let's look at mine. The first thing that comes off are taxes. And you'll see that on your statement. It'll say, these are your taxes, and this is how much money we take. And that always kind of hurts. We recently just have periods of time now where the government has decided, due to the situation with the pandemic of the coronavirus, that they are giving back money. And a lot of people are like, wow, we're getting this money. Where's it coming from? Well, you paid money in taxes all along the way, that the government has that money. There are other ways too. I won't get any more into it. We want to just kind of look at things. Next comes what it calls as a deduction is the direct deposit. And it says primary because it goes to my primary account. That is put there just as a number to see. I wish it kind of came later after all the things that are about to come afterwards. PERSI is the personal employee retirement system of Idaho. That PERSI is the number that goes towards retirement. PERSI, the 401k, there's where my 401k is. It's called the choice plan, but there you go. Flex reimbursement medical. So I have put money in, I'm using money through the flexible spending account for medical expenses. This means it's pre-tax dollars that's pulled and put aside. Medical expenses for the family, that says children there, they're added in. Taxes that are for Social Security. You see the two different kinds of taxes. The one was Medicare, the other one Social Security. You'll probably see the same on yours. Blue Cross is here in Idaho, and we have dental through them as well as vision. Miscellaneous salary deduction. Yay, the department there gets to kind of figure out extra things that come out. It's always very minimal. And it gives a total deductions. Okay, so before all of that, they showed me a number that said, this is going to be your gross income. Then it shows all of these deductions that came out for then a deduction total. Be careful to make sure that you know that your net can include things like the flexible spending account, the 401k, as you go to calculate your net when you try to buy like a mortgage and you're looking for your, what can my ratio be, my debt to income ratio, and I'll get to that really soon. Also be aware, and I'm going to put it up here, that there's a lot of other things that get paid or are noted here. The first section here is leave accruement. This is actually really not to do very much with money. It's really to deal with, okay, how much leave time do I have on the books? How much sick time do I have on the book? Oh, look, there's COVID-19 certified. If I have jury duty, like that leave time is just noted there. How many hours do I have? Below that, the employer amount that they pay. This is the part that helps me realize, yes, I paid some as an employee, but guess what? The employer also paid, and they usually pay through the nose, and they pay a lot more. Employers really pay the taxes, and you can compare. You can look at how much tax did I pay for Medicare and Social Security, and how much did the employer pay, and it's significantly more. For ours, we have workers' comp, PERSI. I'm just listing things that are right there. They pay towards the insurance and for the medical, dental, and vision. So you can see how much they are paying as well. So that's where to look. That's where how to figure it out. Just know that you're looking at the taxes and the insurance, and not necessarily 401k and flexible spending when you're calculating your net. Now the three incomes and which types you receive more of the gross, or in other words, less is taken away. Of the three types so there are three types of incomes. We have labor income, gift income, and passive income. So labor income is where you work and you get paid right away. That's that 2 weeks later, I'm getting money. While passive income is where you work now, you're planting seeds, you're preparing the ground, and you're not going to get paid until harvest. Gift income, someone else worked yesterday. Labor income is where you get taxed the most, and you see the most come out of your check. So you want to focus in on ways to increase your passive income and your gift income when you're really hoping to receive more income that's going to be net income that comes to you. Many ways to increase these. Continue to follow me. Feel free to subscribe below to my channel and see ideas of increasing all three types of income. I'm going to note here about real estate and then gift income. So with real estate, when you're owning real estate and you have the real estate, you will see the passive income coming to you, and almost all of it. There are taxes that come out, especially when you buy and sell in the selling part, and depending on how you do that, and I'm not an expert on that, but get with someone who is. But for the most part, when you see your passive income coming from real estate, almost all of it goes into your pocket, which is a great feeling. The same with gift income. The giver Once they hit a certain dollar amount, which this year is $14,000 per person to person, and there's a way to get, like, if your parents are trying to pay down your inheritance to you, you can do $14,000 from mom, $14,000 from dad, $14,000 from mom to your spouse, $14,000 from dad to your spouse, and get yourself up to $56,000 pretty quick. Enough about gift income and really on the income, and let's focus in on this quick question of what is included in the debt to income ratio. And mostly, do they look at gross income or do they look at the net income? And we're going to do just a fast calculation of this. So the monthly debt payment is based on your gross income. Keep that in mind, because sometimes they'll tell you you can afford a lot of house and they're basing it on your gross income. And you might be putting money towards your 401k and you have a flexible spending account. You know that taxes and insurance are coming out. So you got to know for yourself too, like, how you're doing. So let's look at how to do a fast calculation of what you would do. What I like to do is not only look at those items, but also look at your monthly debt and divide it into your monthly gross income. So let's do an example where we find it as the percentage that it's going to be. So our fast example, let's say we have $2,000 in debt that happens each month, and your monthly gross income needs to get calculated. So to calculate this, this is that number where you are the $12 an hour, and how much am I going to make? So $75,000 a year, that's going to be $6,250 a month. That's your gross income. Your pay stub then shows how much you actually made. Because of the 401k abatement, your net income becomes the $4,570. Just doing some quick numbers here. You can check that math, pause the screen, look at it if you want. So back to the example. If you got $2,000, you want to look at your monthly gross income roughly. You divide 2,000 by 4,570 and you get 43%. Well, what is a good debt to income ratio? What are lenders looking for? Usually they look for smaller than 36%, and with really about the 28% mark being there of debt that's going towards your mortgage if you're looking for that. With all of this, I say get with a lender, find out how much it is that you can afford if you're looking at your debt to income ratio. They like to do that. They run that number for you. Quick calculation, if you want to know how much mortgage you should be able to afford, take your gross income, divide it in a fourth. So if your gross income was just over the 4,000, like that example earlier, those numbers earlier, then you're looking at about $1,142.50 or so. That's just a nice quick divider in your mind of, this is my gross income, this is about how much I could do to be able to go for a mortgage. Well, that's been a lot of information. Thanks for being with me, and I look forward to seeing you on the other side.